What's going on, guys? We'll get started in a minute. I'm just going to reshare the link on Twitter, and then we'll be good to go. Hopefully everyone's doing well. Happy Friday. One, two. All right, cool. Good morning. It's about 15 minutes after the New York Open. Let me switch the screen, make sure I have everything set up appropriately. All right. So it's 9:46. Market opened just over 15 minutes ago. Got a few things to talk about. I haven't been on, I don't remember the last time I was live, maybe like over a week ago now. Reason being is I have a group of people or a team that are working on the YouTube now, which is awesome. So I don't have to do any of the editing. They go ahead and they do all of that. So shout out to those guys. I think they're 3 brothers, if I recall correctly. But they've done a great job so far reorganizing this page. Yeah, I had some non-copyright stream beats playing in the beginning, but not my kind of music. So yeah, we're gonna go over a few things. We'll talk a little bit about the big picture. I'll look at the chat shortly. I'm not gonna look at it in the beginning. Just actually give me a quick sound check. Should get that out of the way. Quick sound check, and we'll be good to go. Sound good, sound good. Might be a little bit of a lag. I see the hearts, so I'm just going to continue. All right, so like I said, some restructuring of the YouTube. So I just posted about this. For those of you that have taken this, it's probably not relevant, although I guess it's better now that it's more accessible. The flow and profile course. So for anyone who's new, I created a course about, I feel like it's 4 years ago now, maybe even 5 years ago now, maybe 4, covering the fundamentals of market profile and order flow. So using things like TPO charts, market profile charts, which are a TPO chart, using things like footprint charts, covering cumulative volume delta, what is delta, yada, 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 how I establish where I want to trade, and then things that I look at to determine if I want to trade. So that was located on a separate website, and now you can access this through the YouTube channel right under here, under the playlist Order Flow and Market Profile course. And you'll find all of the you should find all of the videos that right here, all of the videos that made up the course. I actually got rid of some things, so things that I felt like weren't necessary. A lot of like the really introductory stuff to markets and trading. Chances are, if you're interested in trading the way that I trade or learning about the tools that I use, ideally you should be beyond sort of the baby pips kind of fundamental stuff. You should have an understanding of how markets work at a basic level, what microstructure is, not just talking about how price behaves on low time frames, but actual order book dynamics. And again, you should have sort of a foundation on this stuff before you get into an approach like my own. And again, I've been doing this for a really long time. So this is a really basic course. So again, it's an introductory style course. There's been a lot of people that have taken it and said, hey man, this is better than all the courses I've ever taken. This is better than Axia. This is better than, there's a couple other courses I can't think off the top of my head, and I don't want to shame anybody. But yeah, anyhow, that's all on the YouTube right now. Other things to get out of the way real quick. As a reminder, none of what I say is financial advice. This is strictly for entertainment purposes only. This stream is powered by Bybit. So people ask me all the time, hey, if you're from the United States, if you're based in the United States, can you trade on Bybit? No, you cannot trade on Bybit. Right? I could share Bybit. I can share them on my social media. But if you're based in the United States and you don't have a citizenship, if you don't have a citizenship or a residency somewhere else, you can't trade on Bybit. But Bybit is probably going to become the most dominant exchange moving forward, I think. It's between Bybit and OKX. So the link below, tradebybit.com, that is going to give you access to upwards of a $31,000 bonus, I believe, again, depending on how much you deposit. I showed a chart from DeFi Llama to show how Bybit is the only exchange, pretty much Bybit, and then right behind it, OKX. OKX slightly larger, but Bybit is the only exchange that has seen growth over the last year. And you can imagine what exchange has seen the least amount of growth. I mean, I'm sure there's plenty of small, little obscure exchanges that are completely irrelevant, but what I'm talking about is, what I'm alluding to is Binance, which has just taken a massive hit. Although they've taken a massive hit, they're still the largest exchange, so, go figure. So check out that link below if you're interested in trading on Bybit, and if you can trade on Bybit, right? So if you satisfy those geographic and residency citizenship requirements. Another thing I want to go over, because I am on the team, I am not just sharing a ref link by any means. I am on the core team. This is SyncQuote. So this is a decentralized options exchange. I share this a lot. You guys have seen this on my Twitter plenty of times. It's very easy to deposit to this. You don't have to worry about any multiple steps. Connect a wallet, use a Google Wallet. You could deposit cash directly to this. You don't even have to go through a crypto exchange. But this is a decentralized options exchange, and I think that options are going to grow as the market matures. I think we've already seen that trend. The benefit of this is a lot of people can't trade on Deribit. This is the #1 decentralized options exchange by volume so far. So they've been just absolutely wiping the floor with the other DEXs that are available. And this is a request for quote, meaning it's not an automated market maker, which could potentially get in trouble in a one-sided market. There's a bunch of market makers that are providing quotes. They're tight, they're competitive. And one thing I want to mention to bring this up is that they've now changed the UI. So it's a little bit more like what you would see if you're coming from trading using traditional options chain or product or exchange. And another thing that they're going to be integrating hopefully within the next week or so. I don't want to say it specifically, but if you're not using a market order, what are you using? So yes, that's what they will be adding to the platform in the near future. So right now it's request for quote, but you can't use limit orders. So build off of that and create your own assumption of what you think they're going to be releasing soon. Anyhow, I should say us, because yes, I am, again, not just sharing a ref link. I have joined the team, and I think it's a phenomenal group of people, and I think there's a really bright future ahead. I think that covers sort of the beginning introductory stuff. One thing else I want to mention, because you guys see there's a Phemex link below. I've mentioned this a few times, so I'm not shilling it. I will buy it, but then I will sell it. Phemex is listing a token. You could actually mine it now, right? I am not like, this is not something that's like at the top of my radar. I'm not going to be buying a massive bag, but I do think that exchange tokens perform. And I'll just say that they perform. I'll leave that open. I think on average, they've returned at least a 3x. So when Phemex lists a token, I will buy it on the open market. I think I've already accrued a certain amount either way. But you could mine that now through trading if you want. I have a certain amount that I built up. I'm not interested in like aggressively trading to build that amount through mining. But I will be buying it whenever it lists. And I think, again, listen, if you look at any other exchange that has a token, they've all performed really poorly at some point. They've all kind of given up their gains. But the first leg, I mean, you're looking at, honestly, a 2 to 3x. And there's some speculation about why this occurs. I mean, some exchanges might feel incentivized to pump their token to gain attention and to gain notoriety. And again, attract more eyes and get people using their exchange. And listen, I don't want to speculate as to any exchanges that have done this or do this, but I think that that's not as important as the fact that people assume that might occur on a larger level across exchanges. So I think people just buy these things knowing that they tend to offer at least a 2x. Okay, so I mean, I have the DOMs up. during the stream, or actually towards the end of the stream, we're going to go over what I'm looking at when I'm using these, because as you can see right now, this is Jigsaw. So I finally settled with something that is a phenomenal product. I'm using Sierra, but I'm not using Sierra to trade through. I'm using Jigsaw. So Jigsaw has charting software, but for the most part, I'm just looking at what you're looking at right here. I establish the levels I want to trade at by looking at TPO chart, market structure. There might be other information that's generated that might be relevant, that's more specific, such as, a significant amount of volume building up in a certain area or a very specific area. We might have an event that's worth trading, or a series of events like next week. For example, like this week, today, might not be necessary to get really aggressive, or might not make sense to, because we have roll week next week. You have a couple key events we're trading. Notably, CPI stands out on Wednesday. So yeah, we're going into the weekend. Things are going to be trading a little funny, because again, we're going to roll. So for example, if you were to look at like the contract I'm trading right now, if you were to look at the ES September, it's at, I think, again, it's right in front of us actually. It's 44.60. And if you were to look at the next month, it's trading around 45. So, as we roll, we'll roll up the futures curve, because it's trading contango. So you'll see selling in this month and then buying in the next month. So the order flow is kind of wonky around this time, because again, it's in the curve. But we have that taking place. But at the end of the stream, I'm going to go over some specifics. And then again, along with that, I think because not a lot of you guys are trading the NQ or the ES or trading like I am, I will give you some kind of idea of maybe if you're using like an Exo Charts or an Atlas or a Quant Tower, how you can set up a DOM that would be, in a way that would be advantageous to trading if you're trading crypto. Anyhow, so big picture view. Listen, I haven't been focusing on this market. I missed a very obvious trade yesterday into last night. So I'm just going to make it clear this is absolutely hindsight. But if we look at the TPO chart, so again, where price is spending the most amount of time, looking at where value is developing, my value is developed by volume. Let me get rid of this old one. Same location. So that gray box right there is a single print gap. So it's going back all the way here to the 29th, where we had that big 29th, and then actually the 31st, where we had a liquidation structure up and then a liquidation structure down. All right. So that's left behind a pretty big vacuum, a pretty big pocket. The thing about it is it offers us maybe not a complete bias as to what direction to trade, but a location to trade. So we've been ranging underneath it and establishing value in a pretty clean area. You can see all of this value overlap going back to the 1st of September. And if you don't know what I'm talking about, this is the time when you take the free course. So you have all this value overlap. You spent, the majority of a week within, 25, 650, all the way up to 26. So this is a pretty clean range from a value and a structure standpoint, minus, the wick at the low. Break outside of that range, and then we reapproach this gap. So it's a liquidation candle down. You could imagine that a lot of those liquidations came with stops being blown out, and where there are stops, there are people that are probably similarly positioned but don't have stops. So reapproaching any kind of gap like that. So if you have a one-sided candle down, these candles, right? It's a big ass candle that engulfs a ton of prior structure. It could happen on the way up or on the way down. If it happens on the way down, obviously we assume that there's a bunch of longs liquidated. You could see that in open interest, one of the biggest cleanups in open interest we've ever had. Where that occurs, there's going to be people that are stopped out that are not liquidated. And then again, the assumption is that if there are people that are stopped out, there's also a lot of people that don't even have stops, right? They're just loosely handing positions around here, building a larger position, and maybe they're averaged slightly higher at like 26.4. And this move suddenly changes their bias because, all right, we did away with a bunch of structure. That move should have held up, right? On bullish news, bullish catalyst. Now we've wiped that. We have a massive liquidation. All right, let me get out of this position if I can and reevaluate, right? I always talk about I want to split and reevaluate, right? I want to get out of my position, reevaluate, see more I guess, evidence that this is worth getting back into a long. So as you reapproach the area where gaps occur, you just have to think of that dynamic taking place on a larger scale, right? So you got a bunch of traders that are, they're underwater. Price is reapproaching their break-even level. The threshold of the gap is usually the area where you're going to expect that supply to come in if it's a long liquidation structure. The opposite would happen is if we had a short squeeze, price moved up, reapproached the gap that was created to the upside, and then you have shorts that are like, all right, fuck this. Maybe this thing's going to squeeze up even more. If we reapproach the gap, that's going to be where there's, there are stops. There are people that want to manually exit trades and they're buy back into the position and they'll help it act as support. So we reapproach that from the underside. So that gap threshold right at the edge. So you want to look at where the single prints meet structure. So this is singles, and then you start to have a buildup of value. That's where price begins to range a little. So right at the threshold, so this is where I'll box out single prints. Right at the threshold, that's where you want to look for a fight to take place, right? Whether or not bulls are going to be able to fight their way through, whether or not bears are going to, overpower bulls, not to anthropomorphize it too much, but this is where you're looking for either acceptance or absorption. Chances are if you accept into a gap like this, right? If we traded above 26.4, price was rebid, buyers are remaining really aggressive. Any selling coming in is getting absorbed. All right, then you're probably going to just trade and fill out this gap. You're going to clean this gap up over time because there's not a whole lot that stands in the way. And then you also have unchallenged positioning. You have shorts that are in position that just dove in on the way down. And now as you're sort of trading back towards them, they're going to be buying back and sort of helping this fill out. So long-winded way of saying that's the trade location. And then it's, there's some times when you just get really obvious signs of absorption. And there's sometimes a lot of times when it's not clear. And when it's not clear, that's when you're going to have trouble where you're going to, all right, is this absorption or is CVD leading? Or, maybe you have a sign of absorption in CVD, but you're not at like a really significant trade location. So why would we have absorption here? It's kind of in the middle of nowhere. But so that was the trade location. So that box this is Sierra. So the box is going to draw in the same spot. Where I think I actually didn't even have these linked and I had to manually do that. Well, it's 422 and then it's 422. So price trades up into that gap. You have even highs, right? So this is on Binance. This is the leading product in terms of open interest and price discovery. So you have equal highs and then you have a lower high. And then as price transitions lower, so from left to right, you see high, 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 relatively equal highs, and then slightly lower high, no real wick, more congestion. Where that happens, it's very clear if you look at CVD, just change the ink, that instead CVD was up, right? Price flat, slightly rolling down, CVD up. So optimal area to look to begin to see, hey, who's in control here. And then very clear by this alone that with all this aggressive buying, you couldn't move price up more. So passive sellers are in control, right? The supply is too much for any kind of buying to overpower. So really obvious trade. Unfortunately, wasn't paying attention, and this is one of the problems of not having enough alerts, and also just being kind of apathetic lately. But anyhow, let's talk big picture real quick. Just some thoughts. Let me see if I could shrink this. So we'll keep that DOM open. So we'll have that on the right side of the screen. That should stay, right? Yeah. So just some thoughts. So get rid of Bybit, get rid of SyncQuote, get rid of this, get rid of this. Economic calendar. So like I said, next week you have CPI, and then you also have core PPI on Thursday. So Wednesday, Thursday, and then enroll week should be good for plenty of trading opportunities. So as far as the big picture goes, I think we're kind of, like I said, I think we're in the same position we were last time from a time standpoint. I just wonder if around the halving this time we'll also have an accommodative environment. So I do think the macro is very important. I think that if you don't have an accommodative macro environment, if liquidity is not at least flat, remaining the same or increasing, I think BTC is going to have a tough time replicating prior cycles to a T. So without a catalyst right now, so unless there's some kind of ETF announcement in the near future, I don't see us doing much into 2024. I see us offering plenty of trades within a range. I do think we look at lower prices. I think the lows are in, but I think that lower prices are not necessary. Lower prices meaning 22, 21, 20 region. I don't think that those are out of the question at all. I think it's very, very odd when people say that things are out of the question after watching this market for more than a year. You know, you could watch this market for just 6 months and begin to realize that really nothing is out of the question. And most people kind of assume off of a big move that continuation is going to follow. And then you get in this market, you just get the most incredible reversals. So nothing's out of the question, but absent a major catalyst, I think we're still lining up into going into the halving as the most reliable narrative and most reliable catalyst potentially. And again, most importantly, out of all of that is that we have somewhat of an accommodative environment, whether or not rate hikes have paused or been eliminated, or, you know, I shudder to even say it, or there's any kind of QE, right? It's not something I would even consider, because I think that there's just way too much mind share around that, because it has been a very significant part of markets the last 20 years. But I think clearly things have been different, and you've been banging your head against the wall if you've been looking for it to come back for the last, I don't know, people have been talking about it coming back now for the last year. But I know there's been like hidden stealth QE with the banking crisis, but either way. So I think we're going into the halving from a time standpoint and prior cycle highs, lows. I think we're kind of on pace. The halving is really reliable because of the behavioral component, not because like the amount of supply that comes into the market after that and miners. I don't think that that's necessarily it. Obviously, you know, if the market had the same amount of demand and less supply coming in, you could kind of extrapolate from that prices would have positive drift over time. But then there's still people that can just sell a fuck ton of Bitcoin, right? It makes no difference. So it all depends on demand, right? But I do think that this is the most reliable catalyst to look forward to. And around, you know, the end of Q1, Q2, 2024, I think you really want to start paying attention, at least. I think you really want to start looking for those signs of strength. It's going to be really bad if we don't see signs of strength around the time of the halving. I think that this is kind of like, you know, Bitcoin has, in terms of being digital gold and a bearer asset, that's great. But in terms of the cycles just repeating perfectly over time, I think that people like to kind of mock other people that say this time is different, but it's a new market, right? And this is all very new in terms of what's taken place over the last 2 years macro-wise. So I just would be careful getting rocked into complacency. What you really want to do is just have a tool set going into that time, right? So 2024 starts during Q1. You ideally should have something that's grounded and systematic to some degree, where you could say, okay, yeah, bias clearly is being established. You know, I can establish a bullish bias based on XYZ. For me, I really like to look at the 20-period moving average as kind of a line in the sand. You can see that this is on the weekly. We've lost it now. It's going to just go sideways. I mean, year to date, it's one thing that you should think of, bullish, bearish, whatever. Year to date, BTC's performance has been, you could say it's spectacular, because if you look at the S&P, if you look at the NASDAQ, and then you look at BTC and ETH, they're in that order in terms of beta and returns. So I think the NASDAQ is up. We'll just like year to date this to see. I think it puts BTC up like 30 something or 40. One sec. So BTC year to date's up 55%. I mean, that's fucking awesome, right? So, and then you look at ETH and it's, you know, that's wrong. It's not up that much. It's up less. So BTC has outperformed. But then if we look at like the ES, things begin to dial in a bit more. Again, traditional markets, 22%. And then we look at the ES and, 10%. So reasonable, right? Really good performance, honestly. But if you look at the NQ, or again, the NASDAQ, if you look at the ES, like most of that is being carried by just a few names, which is not uncommon, right? I'd be really careful about making strong statements about that, or the opposite, right? Making strong statements about breadth, because there's been plenty of times where markets just continued up and it was like 5 things that carried it for, 3/4 of the way. So without a catalyst into the end of the year, I just expect that we continue to chop. I think there'll be good trading opportunities, but this market is just kind of drying out right now. Alts, So again, we have the halving in 2024. That should be the, NVIDIA has done most of the I just saw the comment. Yeah, NVIDIA is responsible for most of that. 2024, having most reliable narrative, that's when you want to see strength. That's when you want to see strength again. So if it doesn't happen, it doesn't happen. But that's when you should really start paying attention and start leaning on your own toolkit to determine whether or not the market is showing strength. Alts, I think alts are going to just continue to bleed. There's a ton of supply. There's no real world application. Pumps, I think, clearly should still be sold. There's obviously some games taking place. If you go on like Coin Screener at any given point throughout the day, just change this funding rate. Find the funding rate that is egregiously negative. So you'll see on Bybit a lot of these alts are trading, and listen, some great short opportunities, some great long opportunities, depending on what point. But there's a lot of fuckery that's taking place. A lot of manipulation between the spot market and the derivative markets in many cases. Last week, I forgot what pair it was, but maybe it was FLM. FLM spot and derivative market were like 30% apart at one point, which is pretty crazy. But alts will continue to bleed. There's still, again, there's no real world application. There's a couple alts that I could think of that, again, I've said in the past, should, perform well, but have a shelf life. But I'm very quick to get rid of things. So I'm very suspicious of this market and any of the alts right now. I think that if we have a next cycle that is like prior cycles, it's expected that there'll be some sort of darlings of this cycle that'll do well, like Solana and some and Rollbit, and things that are continuously doing well now. But I think it's the tendency is for just people to flock to anything that's new. So most of the shit right now is just going to kind of like continue to drift lower. I mean, if you look at just everything outside of BTC and ETH, so total 2 minus BTC, but then total 3 minus BTC and ETH, the market is fucking terrible looking, right? It's really thin. So a lot of the movement you're seeing isn't really off of much effort at all. So very easy to manipulate. There's really no reason to get excited. There's people getting excited about on-chain, but listen, I gave my opinion on that. For people with really small portfolios, have at it. That's great, but it's mostly just a couple people pumping and benefiting, a couple influencers, and then them acting like the on-chain market is like printing billions, right? When it's really not. It's super small scale. It's very grifty. You have FriendTech, which is awesome for some people, but I think that too will cool down and has shown signs of cooling down. I'm not participating in FriendTech. I use it for a little bit, but I can't stick to something, and I feel bad people buying shares if I'm not going to stick to it. But if we actually just look at, for example, like total 3, so we'll even take away some things. USDT, take away USDC, take away, we'll take away those. So take away stables even. You could take away XRP, you could take away BNB, you could take away some majors. There's nothing going on. Nothing going on aside from just a few pumps here and there. So I would expect, again, if there's no major announcement, no major news before the end of the year, I think we're just going to kind of chop. Now, I mentioned that, so this is still support, right? So this is still support. I'm not interested in selling this support. I think that the longer that we spend time at this support and we continue to grind, I think that it sets up another situation where breakdown sellers get rinsed. So you have something sort of like we have back here. You have something similar to back here. You go all the way back to summer 2021. Where you do grind lower and that's, short-term sellers get rewarded. But I think the next big move is going to take some time, right? You have to remember that after big moves like this, the market like tends to cool off for a bit and just chop people up. But honestly, I could see us returning back towards this, even just 27 level. And I think that any kind of pump, again, absent any kind of off of any catalyst is worth selling. Let's say we have the ETF catalyst, and this is, I think, something that's worth distinguishing. Let's say we have the ETF announcement and the market it pumps less than 5%. I think that is worth selling as well, honestly. Unless we have a catalyst into the end of the year where the market rips up 10% and we see that there's just an insane change in flow, I think that into the end of the year, all pumps will be worth selling. I think that we're looking at, honestly, let's say we don't even come up here. Let's say we get 27. Let's say we get 28 again. I think we end up coming down to test below 25. I think it's kind of all but inevitable that we end up trading back in this region. I will say, for anyone who's like hyper bullish or wants the good news, I think that now that we've sort of solidified this higher time frame market structure, and we have, you know, a situation where we have a very clear high, and we're looking at this on the monthly. You see the same on the you can look at the quarterly. I think that high time frame change now is something that you just absolutely don't fade. So I think the next time that we get closes on the high time frame, starting with weekly close through this level. So this is we're looking at, you know, upwards 31, 32 zone. So this is your quarterly. And I don't bust these charts out too often, right? But these are, again, you know, the most important inflection points on the chart where the most people can get committed, right? It's not just your scalpers that will get involved. This signifies real change, right? So after all of this juking and jiving down here, if we're continuing to like range and just trade within the structure, and we do test out these lower prices, wherever the fuck that happens, if you're back up here and you have a high time frame close through there, I think that begins the next leg up. And then I think you have to start treating this, you know, however you trade ranges, whether you're using like a fib, whether you're using, you know, a sort of fixed range volume profile, something like this, you know, and you're looking at more or less reaccepting back into value. So that value is actually lower because we included the drop, but you can see that the value area low, value area high of the structure, and then POC, you get some reasonable levels of trade within there that are quite a ways up. So point being that if you get a high time frame close through here, that's probably where you want to be really patient with long positioning. That's where I will be really patient with long positioning, because chances are that over time, whether it's over a month or 2 months even, or maybe it happens in a week, who knows, there's just very high probability that if you're trading back above this level after this type of rejection, we're back within this larger carve out, that we're going to take some time, but we'll end up tagging some of these more important levels within the structure. So that is like the most obvious level on the chart to me to get really bullish, and to also be really patient. So this cutoff point for the monthly, quarterly, weekly, what have you, it's very clear where that level is. And again, the point is that it's really clear, and clear allows the most amount of people to get involved, right? Especially on the high time frame, right? So if you're bearish now multiple times, now you've been rewarded, right? Treating this as resistance, but now you got 2 touches. If you're closing through that level, like, and you can't admit that you're wrong at that point, well, then, you know, it's on you, and you'll deal with the issues that come from that. All right, so low time frame wise, I guess I'll just bust out the we'll open this up. We are trading within we are still trading within a range, more or less, right? So we found trouble in that gap. We have a multi-day composite, so we're trading back in that multi-day composite. So if you just combine all these days, which I think is reasonable because you have more than 50% overlap for a majority of them, right there, you have the area of acceptance where more or less price is where it is, where it's accepted. So anything within here is really accommodative. There's really not much you could say directionally in the center of this, as much as you can at the extremes. So I would just, again, I don't want to miss it the second time around. If we're reapproaching this high, so if we're trading back above, for example, we're trading at, we're right now 25,894. If we're trading back above 26, trading back above this composite, and we're back in today's sort of single prints, I think you have another short-term opportunity back towards today's POC, so something like 26, 250. If we continue to test this high, maybe we just go ahead and fill out the larger portion of this gap, right? So if we're continuing to press this high after trading back into the bottom of this gap, and we're holding this structure, right? So something like trading above today's POC, I don't think that you get sort of a second rejection here that sends us lower in the interim. I think that if you're trading back above today's high or at today's high, or again, more importantly, I think the first sticky point is today's POC. If you're trading above that and you're accepting towards the high of today's value, so we'll just say accepting between 26.2 and 26.4, so that $200 window, I think that we're probably going to push and test out the higher portion of this gap up here. So I'm sort of squaring away this because there's two areas of singles separated by a little brief period of back and forth. Otherwise, I would look for just more signs of traders getting caught offside at the low end of this range. Like, again, do I think that this is going to roll right away and give us another really big move in the near future after this kind of open interest wipe? Not really, unless there's a bunch of spot selling that comes in. So we saw that this big move was off of a very significant wipe in positioning. So unless you get a bunch of spot selling below this, and again, I know there's a ton of supply that's connected to FTX and liquidators. I believe it's FTX, the more recent one. So you could always have that, right? But I think that's going to be relatively controlled. They're doing some kind of damage control. They're not going to just dump that at market. So if we end up trading back towards the low of this structure, I would probably look for that third time a charm trap, right? So you had a bunch of activity trapped down here. So if you look at this entire profile, this is the volume profile and delta for the entire composite. So this is where using a volume profile and looking at a TPO profile together are useful, because you actually have cases where you'll have tails like this, and you might have a tail that looks like that in the profile, and sometimes you have a profile that's a volume profile like this, and it doesn't really show you much took place down here. The volume profile matches the TPO, so they're kind of complementing each other. But the best situation is when you have a tail like this, so you have excess at a low, and then meanwhile on the VP you got a bunch of activity trapped at the low. So more or less what you have right here. So you just have you have a bunch of sellers that got caught basically expecting the breakdown, or you have longs stopped out as well. You get a bunch of just supply that was scooped up right here and absorbed. So I don't know if we're going to get that same kind of play the same exact way it happened, because these lows are really even. So I would honestly, all right, so let's just guessing. I think this does end up, like I said earlier, I did mention this earlier, I think it does give us like what looks like more of a drift lower, but that the major leg never comes. Again, unless you start to listen, this is all based on, we haven't seen a ton of spot selling yet. We've seen, again, supply, but no real crazy spot aggressiveness towards the lows, right? So absent that, I think you get some kind of grind lower. And then I would look for selling to build up down here. I'd look for the signs in delta and the signs in volume that you did have a bunch of selling, and then you have really clean lows. So if you are trading, let's say, for all intents and purposes, it's 26, it's like 26, 25, we'll say 25.3. If we trade below 25.3, we're grinding below there, and then we're able to trade back above, sell and rebid, and you see that down here there was a bunch of activity caught off sides, whether that's open interest up or just a lot of volume that was transacted down there, then yeah, I think we're going to continue to like fuck with emotions on our way down, because I think overall we're going down. So just to be clear, I do think you get spikes on the way up. I think overall we're headed down, but I wouldn't want to get overly aggressive about shorting, for a larger move down, because I think it could take some time. I think you'll have better short opportunities that might set up slightly higher. And right now we're just kind of trading within a gap, within value. So it doesn't really make sense to get positioned where we are and where things are most accepted. So I think, listen, I don't know if there's a whole lot that's worth even focusing on in this market. As I've said with Solana, I think Solana is going to be more or less what ETH was. I think Cycle is going to follow similarly. So from a time standpoint, I think we're kind of in this region with Solana as far as where it is in its cycle in terms of maturity. I don't think Solana is dying. I think Solana is going to be, if we see ETH and BTC continue to push into next cycle, I think Solana is going to be a clear winner. But again, if we look at where were we from a cycle standpoint, 64 weeks, and then if we look at Solana, I think again, I just think it's a matter of we still have a good amount of time. So from low to, and this takes us into second quarter 2024. So everything's kind of lining up from a time standpoint. We just need markets, global markets, to not fuck it up, right? And if the best case scenario would be them, ripping, or us seeing, strong performance across the board in risk assets. Alts, just, it doesn't make a whole lot of sense to look at alts and just pull open a bunch of charts, right? I think that there's a lot of games taking place. I think that there definitely are trades to be taken, but I think that rather than just going, if normally this is your approach and you're going to like filter a bunch of charts, go through the top 100, okay, so, I'm just going to scan a bunch of charts, see where we are relative to major high time frame levels, set alerts. I think that's wasting your time right now because the market continues to just grind. I think I would, if I'm trading alts, and I have been trading a couple alts the last few weeks, all I'm doing is basically screening on this Orion terminal. So I'm screening based on, so you'll have a bunch of settings for this. It's not chilling. I'm sure there's a bunch of other platforms as well. You got a bunch of platforms springing up left and right. All I'm doing is basically filtering for funding rate, and then I've removed a bunch of the columns that would normally be here. So just open interest change 8 hours, total open interest, volume delta over the hour. So I've found that for the most part, sticking with the pairs that are showing this kind of egregious funding, those are the pairs where most of the eyes are going to be and where most of the trading is. You could look at just volume. A lot of times is going to confirm that. Some of the volumes are getting a bit lighter lately because, again, I think the market's bleeding out. But a lot of times you look at the funding rate and it's negative 2%. You look at the volume and some of these coins are trading, 100 million every 24 hours. And they're liquid enough to trade, but they're just hyper volatile. So I think, again, market is it's in a really shitty place. It makes sense to... It makes sense, honestly, look at other markets. Like people, if you're finding a lot of success trading crypto, you probably have the kind of brain that could figure out something somewhere else as well. It's the best way I could put it. Unless it's some kind of, super idiosyncratic, anomalistic edge, that only is available in crypto and it's only particular to maybe an exchange or a pair or what have you. If it's an edge based on you having proper discretion and not fucking yourself by having bad risk management and, again, having repeatable approach to the market, you probably can do that in other markets. I want to say I'm all but certain that you can. And other markets have been honestly great to trade. Does anyone have any questions during the stream? I'm going to actually go over the DOM. Took a look at that. Give you a second. So I've been trading the NQ. And if we just look at the NQ right now, we came off of, I'll give you guys a second to ask questions. We came off of a 4-day balance, broke down, and sort of similar. What happened was we traded through a gap. So as I mentioned with BTC, here is a gap on the left-hand side of the screen. So you have single prints, an area of value separated by no activity, no value, and then area of value. So you have a double distribution. So on the way back to that level, that was the area where you saw a response, right? So right at where that pocket began. And then as we traded back into it repeatedly and didn't see an immediate response by bulls, we just accepted and continued to fill it out. So that's where the actual singles were. This is where the low volume node begins. So you can see we got a response at the singles again, and it just offers a first area to look and first area to start paying attention to see if there's a lot of times just scalps that are always going to be available at those levels. But if you don't see a response, more often than not, you're just going to fill the entire thing out. So you can see that's what we've done with the NQ. Filled out that prior gap. We're trading within yesterday's session. I mean, this is including overnight, so not just RTH. You have complete value overlap for the most part, or we have a complete, session overlap. So you have an inside day. Wouldn't get overly aggressive at yesterday's highs. Yesterday's highs are a poor high. So this is a decent trade location. I'm gonna wait for questions, and then maybe we'll end up taking some trades during the stream. I always find it's easier to say we're gonna trade during the stream, and then we talk, and then we're not paying attention. But this is an area where we could look for some kind of setup to scream, but right now it doesn't. We're holding the opening range. So the opening range is those 2 bars right there. So opening 30-minute range. If we start trading back within that, maybe we'll look for some kind of short setup to trade back within value and fill out this range a little bit more, right? So we didn't trade below. We didn't trade below the overnight lows. So right at the beginning of the session, pretty one-sided move off the open. So I mean, I can imagine that over the next few days we end up trading back towards 15.2. So we'll look to see if we have a setup in that direction. Right now, we've kind of just kissed that yesterday's high, so it's slightly higher. So we'll see if maybe we get a spike above that, unless it's just going to roll right here. I want to look for a spike above that, then maybe we could sell, depending on how price behaves if we trade above that. Otherwise, I'm not going to chase this down while I wait for you guys to ask questions. But the last 2-day value is pretty clear. Again, just to reiterate how I'm deriving that. So profile within profile, value within value, and you're looking at the TPO value is going to be different, but I have it to volume value, so it's going to be slightly lower. But either way, it's an inside day, and you'll find that this is probably pretty balanced from a participation standpoint in terms of value. So you're probably looking at something like, if you had a TPO value area, for some of you that use that, you're looking at something like this. Doing this long enough, you probably eyeball this stuff. All right, so let's see the chat. If it's going to just melt here, that would suck. So I have this set to 300 trades, which is a lot. Is for, you're going to get a lot of activity. Market's a bit slower, so when it's slower, I'll increase that, or I should say decrease that. When it's faster, I'll increase it. So I'll use like 1,000 volume chart. You'll see it's a bit different looking. There's a lot more activity, but this is just a tick chart. So this is only going to print candles when there's actual trading take place, rather than using a time-based chart. Yeah, Ryan Terminal is great. Buying the ETF, I don't see a reason to buy the ETF. I mean, I could own the spot market. If you have a chance at owning the spot market of something, it doesn't really make sense to buy the ETF unless you're going to add it to a traditional portfolio, right? That's fine. There's a lot of people that are helped out by ETF listing because right now there's only ETPs and CME futures, which you have to roll up the curve since it's trading in contango and you pay that roll yield. So it's great for a lot of people, but for someone who's already in this market, it doesn't make sense to buy the ETF. Unless you want to deal with lack of counterparty risk and you're done with this market, but you want exposure. An options tutorial? No, I'm not the guy to give an options tutorial. I know enough about options to trade them myself. There's a massive breadth of information when it comes to options that I'm not familiar with, or I am familiar with, but I am just not proficient in, or just hyper fluent in enough to teach. And that would just be embarrassing to teach something that you're not super fluent in. How do you read the chart with stacked horizontal blocks? So this is good. Use the course. That course that I just talked about earlier in the stream, that is where you will learn all about that. So this is just a TPO chart. So real quick rundown is a time price opportunity chart. So each one of these columns, so 1 column, 2 column, they're labeled A's, B, C to show you the different columns. But each one of these columns is a 30-minute window of prices. So where price was over that 30-minute window. So just think about 30-minute candles with no open and close, but instead just high-low. And then what we do is we just compress all of that. So by doing that, we're able to see what price levels price traded through the most throughout the day. So where price spent the most amount of time. Now, it might not say the most amount of time because you might have a 30-minute candle where it zipped up to the high, zipped down to the low, and then spent, the remaining 28 minutes at one point. But it's just showing you the range of prices for those periods. So where price favored, where value developed, you're getting an idea of context. So when you have profiles like this, a bit more balanced than looking at a profile like this, which is 2 periods of balance followed by an imbalance portion. Then you have a balanced profile, so balance, relatively balanced but not very clean, and then going all the way to something like you see on the far left, which is very imbalanced, right? A trending type of day. It's not even a trend day. It's just it's a short liquidation kind of day. Trending profile, a balanced profile look like this, sort of like a Gaussian distribution, right? And then a imbalanced trend day where price is doing this will look like this. So brief periods of balance separated by imbalanced regions. Just take the course. It's free, and it'll explain everything. All right, so what we're looking at here is this is Jigsaw. This is the best DOM software next to, I think, Trading Technologies. I was using Sierra for a bit, but I just couldn't get my finger on why I wasn't enjoying it. There's a slight lag in Sierra's DOM, and it was enough for it to mess with my head because you'll see that the price might have moved on the chart slightly more than the DOM, and there's just some kind of sync issue. And that's not something that you want to deal with. You never want to deal with any kind of data issue. You never want to deal with any kind of speed issue, especially if you're trading and you're looking at you're trading off of a DOM, and you might be swing trading, but a lot of times you're also scalping. Or I should say that I might swing trade, but I also, a lot of times, I'm taking a ton of scalps throughout the day. So I want something that is updated immediately. And Jigsaw is just, again, I don't work for Jigsaw. It's not shilling. It's free shill. It's an expensive platform. So, I mean, it costs, I think, upwards of $1,200 or I can't remember actually. But you could use ExoCharts has a DOM for crypto. Atlas has a DOM for crypto that's free. You might not get the best data feeds, or you might not. It might have some latency. I don't know. I mean, I used Atlas for a brief period. I didn't really like it. I had some issues with it, in particular the update speed. But all right, so you could set your DOM up like this either way. So I have a tape. So this is a filtered tape, reconstructed tape. So I have block trades. I have regular trades that are going through. And then I also have trades that are above the ask or below the bid. So at any given time, I could do a really good job just by looking at the tape of telling which side of the market is really aggressive, how fast the market is moving, how interested the market is in certain levels, or whether we're looking at breakouts or breakdowns. The tape should confirm that, right? So these blocks that you see, ideally, if we get a breakout or breakdown, for a breakout, you would want to see that this tape is just flashing blue, right? Where you have these blocks flashing blue, and then right now what you're not getting is trades above the above the ask, so above best bid, or it would be above best ask, best offer, to see that people are getting really aggressive. There's really none of those popping up right now. It's a slightly different blue that I have, but this is your tape, right? Jigsaw actually has a tape meter, which is pretty cool. So you could change the milliseconds for how this updates. So the tape on the left is a minute. It's going to show you which side was more aggressive over that minute. And then this one is 15 milliseconds. So it'll adjust a lot faster. So if I was just going to use a tape, right? And this is not something you're just going to use. If I was just going to use a tape to trade, right? How would you at least start? By just using a tape? Well, you're not going to, but the point is, like, what would you do if you needed a fighting chance at trading? If someone put a gun to your head and says, you got to figure out what to do through this level. Well, you're getting an idea of activity, right? Interest. So if we're just looking at, let's say, for example, yesterday's high, right? So let's say you get a candlestick chart and a tape, or a TPO chart and a tape, profile chart and a tape, whatever. So here is this is the NQ tape. We'll just talk about this as if it's the same thing, right? This is the NQ. We'll use the TPO actually. I mean, it's not as good an example because we're traded above yesterday's session in the ES. And notice how I have the ES and the NQ tapes next to each other because I want to see how those markets trade next to each other as well. A lot of the times I will take NQ trades off of ES activity, but that's something that you'll need to refine over time. So let's look at the NQ, right? So NQ, equal highs. Imagine the market trades up to that level. What would you want to see if you were a bull on the tape? You would want to see a fuck ton of buying coming in, right? You would want to see a ton of buying coming in. You'd want to see this tape ripping and a bunch of blue, right? Ideally, you could have a ton of red coming in as well, but the market, ideally, you would want to see it remain at those price levels. So if we traded above 15.4, you want to see that buying is coming in. Any selling coming in is holding that level. So let's say you see a bunch of blocks trade at 15.4, but price is still at 15.4, and you saw all that volume come in, and price is still trading at that level. You could begin to determine whether or not absorption is taking place by just looking at the tape. The flip side of that would be, let's say you're looking at this high for some kind of swing failure and some kind of sell or potential selling opportunity. We talked about that. Hey, maybe we're looking at price trading through that high and then getting behind a short through, after we trade through the overnight high, that we already made a new high. We trade through yesterday's high. We're looking to maybe trade back through value, target yesterday's value area low, yada, yada, yada. Ideally, what you would want to see is if we trade up to that level, same kind of activity, maybe you have a bunch of buying coming in, but all that buying is not lifting us higher. So you just see, for example, maybe you could see an iceberg develop by seeing that, hey, 15.4 prints, bunch of buying coming through. We're trading through that level, but we are not able to make any kind of new high, and yet buying is still coming in. So a bunch of buys coming in, trading into, let's say, 15.401. You see all that volume going through. You see the tape zipping, but price isn't doing anything. So someone is clearly on the other side of that, absorbing that. Now, you could have dark pool activity. You can have an iceberg, depending on if you're looking at like it trading into the offer or trading between best bid, best offer. But either way, you begin to gather whether or not there's absorption taking place. If you're in a really strong move through this level, you want to see that any buying that's coming in is being rewarded and any selling that's coming in is being punished. So you get buying through this level, price is moving up easily, selling comes in, price doesn't move down. You see buying start to pick up again, and you're long, right? You want to see that buying continuously come through, and you begin to get an idea of like the pace of the market as well. Again, you see a bunch of buying come in, speed up, speed up, speed up. Price isn't able to trade through the level enough, and then you start to see things slow down, and then you might see that transition. You have a bunch of blue, maybe it's green in your case, bunch of blue coming through, price isn't going anywhere, and then you start to see selling coming in and things are getting slippery, and you begin to see, all right, sellers are clearly in control. The thing on the DOM, so what we have on the DOM, in case you want to set up your exo chart, is a volume profile. So take advantage of the fact that you could change volume profile colors. I don't need to actually, the less that I have to look around at charts, the better off I am if I'm trading off the DOM. So this profile in the ES is going to match today's profile perfectly. You'll see this line right here. So that purple is the value area. That's sort of, what is that? Like teal, seafoam green. That is the area outside of value, right? So value area for today, purple. And then we have the point of control. So the point of control for me is this pink one. Then we also have, you can barely see it, there's like this light blue, that's VWAP. So I get an idea of today's session right away, right? How today's session is building, how value is developing, whether or not as we're trading higher, that POC is moving up. As we trade lower, we hold that level. I can begin to determine all of that through looking at this alone. I could also see the low volume areas to see, all right, maybe, 4467 VWAP, low volume region, we start trading back to that. Maybe I'll look to bid that and see if we can get any kind of response off of that. And then not only that, I'm not just looking at the profile. I also have it right next to the depth of market. So right here, this is your market depth. So these are your bids, these are your asks in this column. So let me change the ink real quick. You could set this up identically on Exo charts. I think it's like $30 a month. You could set it up for free on Atlas. So here are your bids. You're going to see those changing a lot. Here are your offers. Those are your asks. These are just advertisements. It doesn't have to be that these people actually have any intention of trading. If you're trading cryptos, chances are they might have been removed already on Binance. You might not get that update as fast as they've been removed. So it's like you're looking at a star that's gone. So these are your bids, these are your asks. So let's say, we're looking at 44.67 as our area of interest. So now if we trade him back down there and I'm looking for maybe a long opportunity off of VWAP, I mean, what would you want to see down there? You would want to see that area stack up. You'd want to see that area stack up. Maybe the ask begin to thin out. Seller's not as aggressive or not as willing to offer that down. So less activity at the offer than at the bid. Now, you could try to do that by just looking at that alone, or you could use pulling and stacking. So pulling and stacking columns are right here. So that's bid pulling and stacking. This is ask pulling and stacking. So right away, what I get to do is I get to see the quote updates. Are they being added? Are they being subtracted? Right? So this number on the left is the amount and quantity of contracts that is changing at the best bid, and the opposite is at the best ask, best offer. So it's going to be positive if there's adding. It's going to be negative if there is removing. And this is going to flash so much because of high frequency trading, right? So if you're wondering, well, how does it go 100? How does it go 50? How does it go back to 100? Well, it's being changed constantly. The most important thing is not this, like, for example, let's say we trade back down to 67, and that's our level to focus on. It's not like, 67, we're 67 bid, right? 25 offered, and there's 100, that are being added, or 200, or some. You'll see larger numbers towards the end of roll. So 400, right? Oh man, that looks crazy. Like they're adding 400. You don't know if they have intention of doing business. See, you get yanked all the time. So that's where, and this is why, like when we trade down to a level, and you have this option on other DOMs as well. So this is all accrued throughout the session right now. So this is your volume profile. It's basically this is your volume profile. This is your footprint profile. So this is volume at the bid, volume at the offer, at the ask, sort of like looking at a footprint chart. So it's this, but over the entire day. So from level to level. So now I could see, all right, so at that POC down there, who was more dominant, buyers or sellers at that specific level? Well, from a cross-sectional and a diagonal standpoint, it was clearly that sellers were more aggressive there. Because I get that breakdown of aggressive activity at the bid, aggressive activity at the ask or at the offer. Now, I don't leave that throughout the day. If I need to go back and check volume, I have a footprint chart or another chart. I prefer to have it broken up a little bit. Obviously, I want to keep the volume profile the way it is. But what I will do is I actually just, on my hotkey, I just refresh this. So now let's say we're trading back down 67. I see that it's firming up in the bid. That's great, fine. And now I see, yeah, okay, let's say, so it's being removed now. Let's say that I see it's getting stacked there, like 200, 250 below. And you see they're zeroed out now, but it could be a couple layers down of just getting stacked. And you see that DOM stack up. And let's say really quickly you see that is getting removed at the offer. Simultaneously, bids being stacked, offers being removed. The most important thing is that you actually see flow that comes in is transacting at that level. So if I have a big bid, right, a bunch of contracts getting added to the bid, I want to see that they actually have intention of getting filled. I don't want to see they're just yanking. So in the middle is actually your last transacted quantities that are filling up. So you could see, for example, 200, right? So 200 flashing, 67, 87. There's nothing being transacted at that bid yet. So now you're going to start to see, okay, 32 traded, 50 traded into 100, right? You get the idea. That person is actually sitting there doing business. Now, they might not be in the front of the queue. They might not actually have gotten hit. There's people ahead of them that have queue priority. But if you start to see a bunch of stacking, that bid's firming up, and you're seeing that last traded quantities into that level are staying sticky, then yeah, you got an idea that there's some absorption at that level. You'll see it build up. The point of having this all right here is I don't have to look. Oh shit, is that on the footprint? I could see. Okay, last traded quantity is still there. So the footprint is still there. This last traded quantity is going to change, right? It's going to as we trade back above and through a level, it's going to remove the more recent quantities. So it's going to change, but it's going to remain. It's kind of weird how it's set up. But you'll see it won't just continue to increase over time the way that the footprint will. It'll constantly just show you, like, for example, if we trade back through 74 now, it'll wipe that, and then it'll start it fresh. And then you'll see that this will become an entirely different quantity. It might become 20, it might become 30. These are going to color actually based on momentum. So if you have, like, if we're strong, we're above value right now, There's a bunch of buying coming in, right? You can see now we're stacking and doing business there. Stacking 262 absorbed at 72.25. So maybe this continues to push up. Be a good example of absorption. We are above yesterday's high. We're above today's opening range. So either way, above today's value. Got a good amount of buying coming in. Sellers absorbing, or selling is being absorbed, right? So 509 right at 72.25. So decent signs so far on part of the bulls. So you want to be able to, obviously this is something you got to develop an eye for. Something else I was going to say. Oh, in strong momentum, these columns are actually going to remain kind of lit up, and depending how strong the move are, will determine the opacity of the actual block colored. So if we have a really strong move, I have it set so that it'll be dark blue, right? Versus us going back and forth, you'll see like color fade in, fade out. But this is, again, pulling and stacking, right? So just real quick, you want to set your DOM up on ExoCharts. A volume profile, right? Set it up so that the colors are set up to show you the important things for that day. The value area from a volume standpoint, the POC, obviously from a volume standpoint, and the VWAP. And then you have the bid and the ask. All DOMs should have last traded quantity available, right? So if you go to set them up on Exo or Quant Tower or Atlas, it might stack them all in a different configuration. You got to move them around, so you could just drag columns. So you have this is the way I prefer to have it. Last traded quantities in between the bid and ask. So here's the bid, and this is recorded. This video will be up. You guys want to go over this part again. The bid, last traded quantity at the bid, so aggressive sells, the offer or the ask, and then last traded quantity at it, so aggressive buys. And then pulling and stacking, pulling to the left of the bid, pulling to the right of the ask, pulling and stacking, right? So if it's a negative number, it's pulling. If there's no negative, it's stacking. So they're adding. Again, so why is this important? Well, if you're trading higher frequency, if you're trading and you're scalping, if you're just kind of like trading around core positions, one of the things you might be paying attention to is the frequency of book updates, right? So the frequency of book updates, how fast new bids are coming in, how fast new offers are coming in, and whether or not this is an indication of whether or not there are people that are actually interested in doing business. If you see that, again, the level is actually being transacted into. Last thing I'll go over during this, it's honestly, can we just say how it's actually so difficult to trade during a stream? And I'm not saying to actually do it, but if you have stuff you want to talk about, you can't trade. Like I have a bullet point list of things I wanted to cover during the stream. It's just impossible. You could see, so for example, like one of the things I talk about is I use the ES and the NQ next to each other, right? If the ES is making new highs and the NQ is lagging behind, the ES is showing strength, a lot of times I'm going to take that as a leading indicator. If we are making new lows and the ES is completely getting smothered and the ask is walking it down and buyers are just not interested, the NQ is moving really fast. So I'm not going to get the same granular feedback as I would from the ES because the ES is moving differently. But a lot of the times the NQ for me it's timing off of the strength in the ES. As that might sound kind of weird to some people, but if you traded crypto, you've probably traded one asset on behalf of the other either way. If I'm trading the ES, which I trade often as well, I'm just using this. I'm not looking at the NQ really. Unless we're in a different environment, right? I mean, periods where NVIDIA was just crushing things, I might look at the NQ if it's making new highs and begin to, determine whether or not getting into position in the ES is a matter of lag. But what I was going to say, I lose my train of thought again. The last thing I'll go over is icebergs, because you won't see an iceberg or even like a dark pool. And I don't want to talk about dark pools because it's not something that you're going to be thinking about in crypto. So if you're going to look for icebergs in crypto now that they're more prevalent, determining an iceberg is pretty simple, honestly. One, you could use a volume profile. Let's say that we are looking at, just for in terms of, let's say 72. So 44.72. A lot of times you'll hear me talk about the ES in just 2 digits, and it's because we're at the 4 handle. I mean, we'll talk about 72 being 44.72. Let's say there's an iceberg there. There's a couple ways you could look at it. If we're approaching it from the low, well, let's go to a higher price so we don't tag it. Okay, so 82 up here. So in the situation of an iceberg, and it's in the offer, okay, that offer is going to be hidden. You're not going to see it. It's not going to be in the iceberg. You might see 2,000, 1,000, 3,000, 4,000 contracts transacted. They're not going to place that in the bid or the offer. Sometimes you'll see that. You could guarantee that that's not transacting, right? You ever see a 2,000, 2,000 lot bid or offer, or even greater than that? Like, it's not. That's not the intention of that. Is not to actually transact. Like, that's to move prices one direction or the other. And that person's probably going to get in trouble at some point, right? There was a well-known CT person who was in trouble recently for spoofing in crude oil, West Texas oil. So anyway, let's say it's 82. A couple ways you could look at that. You don't have to use a DOM. You could use a volume profile that has a really low tick increment. So the most granular volume profile you could look at. Why? Let's say that we were looking at 82. We're approaching 82, and there's 100 in the offer. There's 50 in the offer. But as we're approaching 82, let me just use black ink. As we're approaching it, what the fuck? Hold on. We're approaching 82. We got a volume profile developing, right, for all of this price action, and it's really granular. So it'll be something like, it'll be sharper kind of volume profile. Or you're looking at this volume profile in the DOM. As we trade up to 82, you might see that the offer remains static. There's not a whole lot going on. It's refreshing a lot. More importantly, it's refreshing a lot, but there's not 1,000 contracts in the offer. But we're trading into that level, and you'll see the volume profile actually really pick up. So you might see a volume profile that literally looks like that, right? Skinny, and then you just have something that's massive like that, a big spike. And that's because all that volume is taking place. It's not being shown in the offer, but it's being transacted. And then you could look at a footprint chart. You'll see it cleanly in a footprint chart. You'll see, let's say a 300 tick rotation in the ES, and then you'll see, for example, just look at the footprint. On average, the delta is going to be anywhere from 1,000 to 200, and you get an idea of like tick point values that are average or just expected. You get 300, 100, 248, 89, blah 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 blah. You might have a case where the footprint has literally like 2,000 at the bid. Okay, that's an iceberg. All right, so let's say it was right here. We trade back. You're going to see the same thing happen. It's going to be like 1,000 at the bid, and it's going to stay. It's going to stay put. Now, I've gone over how I trade icebergs, but the point is, this is one way to determine they're there. Looking at the DOM, it's the easiest because you're literally going to see, especially if we're in new territory, if we're at 82 and we're trading up to 82, you're going to see this volume profile build bigger than it probably had at any other point during the day. Now, this is the entire day, so it's not going to build up more than what is accumulated over the day, but it's going to build up more than any one particular price point that fast. And then you'll also see, again, the footprint. If it's trading into the offer, you'll see 2,000, 3,000, 4,000 contracts. And if you're refreshing, again, the point of refreshing is you'll see that begin to build up much more rapidly at one particular price point. So you can see this. It's not going to be advertised, but you're going to see all that volume transact either way. And what happens is there's only the tip of the iceberg that's exposed, right? It's constantly being refreshed. The queue priority is there, so there's orders being inserted, and no one's able to jump that. And you'll get some decent short-term trading opportunities around it, but I won't go into I've listed that in the Discord completely. I've talked about it in other streams, but anyhow. All right, guys, I think it's 11 o'clock. I think we're going to wrap it up. Yeah, the intention is actually to take trades during these streams, but it is nearly impossible to do that as we're talking about that much. Just talking that frequently, at least. These videos, so again, subscribe to the new YouTube channel. Check out those links below for Bybit, for SyncQuote, and keep in mind Phemex is listing a token, I think in the next couple weeks. What else? There's a Phemex link below with a bonus. What was I going to say? Oh, the course, it's part of the YouTube now, so be sure to take the course. A couple of you guys had questions that are answered in the course. And yeah, this will be chopped up, edited, and reposted probably some point either today or tomorrow. Till then, I will stream again on Monday.